All right, so five fastest ways to become rich by investing in the stock market. So we're going to look at the different ways you can do that, and I'll show you examples on a chart of each of these ways that you can possibly become rich one day. So number one on the list is day trading. So it says if you're a nimble and proficient trader, probably the easiest way to make fast money in the stock market is to become a day trader. So I'll show you what that looks like. So when it comes to day trading, obviously there are going to be different ways you can do that. So some people use the Bollinger Bands. Uh, I'm not really an expert at that, but I'll show you the way I do it. So basically, the way I like to do it is with momentum trading. So I'm a momentum trader. So up the top, we have a line here, which is resistance. And then at the bottom, you have support. Now, we're looking at the SPY. So the SPY follows the S&P 500. So you can see the low on the chart here is 578. The high is 502. Okay. So what will happen is if the stock goes above this line and it stays above the line, let's say it moves here and it's showing signs that it's going to stay there, basically I would buy in and ride the wave up. So if I think it's going to go up, I would buy a call. So in this case, if it's at 502, let's say, I would get a call at 503, which is here. So this is the ask. This is what you can buy it for. So let's just kind of play along here. So up here is what I would buy it for. Now I would already have it preset to take the profit that I want, which I don't know why it's defaulted to 10, but usually I will go. Oh well, here it is. So sorry. So usually I would go with 20%. Uh, as far as making money. But if the stock comes down, I would only take a 10% loss on that uh, $21. Okay, so that's basically how that would look. Now, obviously, for me, since I'm a little bit more advanced, I would buy more than just one contract of a call, but essentially that's what it looks like from a call perspective. Now you have support down here. If there was action where the stock was coming down and it goes below support, there's a good chance this thing could come all the way down. And now I would get a put. Okay. So I would get a put, let's say at 597. Okay. I would select that for a put. It's already set here for me to get my profit that I want. Listen, I'm not greedy. All I'm looking to get is 20%. Some people may not have this automatically on, and they may just look at the movement and let it just go. But what I found is that if I don't have a stop loss on, meaning it's going in the opposite direction, I'll tend to lose more money that way if it doesn't go in my favor. But typically, momentum trading is going to get you about an 80% return if you follow the principles. Again, if the line breaks below and it's showing that it's going to stay below for a period of time, then you would get in here. If the stock is going up and it breaks above resistance and it shows strength above this line, then you're going to ride the wave going up. So you're riding the wave going up or you're riding the wave going down. Okay, and that's how that works. Now, coming back to the article, the next one on the list is selling shorts. Okay, so if you're a short seller, essentially bets that the stock price will fall. So on the technicals, we already talked about that, and that's doing a put. Now, all of the rest of this stuff um, is essentially, a little bit more informative of their particular strategy. But there are two ways you can short sell. So you can do a put, but then there's also What we have SQQQ. So if we search here, so SQQQ. So the SQQ would be shortened to NASDAQ, for example, and this is an actual stock. So if you don't feel comfortable doing the option thing, you can just buy a a stock outright for short selling. So with these, we typically would use these as a swing trade or day trade. This is not something that's meant to be held long term. Okay, now you can dollar cost average into this if you have an indicator that this stock is going to be coming down. I'm sorry, that this stock is going to be going up, then you can go ahead and buy this stock here. Okay, so essentially, in a nutshell, that's short selling. So basically, you can buy a stock like SQQQ or SDAO, which follows the Dow Jones. You've got SPXU. It's one that will follow shorten the S&P 500. So there's all kind of ways you can short the market if you have an indicator that it's going down. Okay, that's short selling. It says trade speculative over the counter stocks. So over the counter stocks are going to be like your. So you got. Let me see. Trade. So let's just see. So although names like Apple and Microsoft dominate the financial news, there are plenty of stocks that average investors likely have never heard of that offer vastly greater opportunities for profits and loss. So over-the-counter stocks, for example, don't trade on a public exchange and often sell for pennies per share. Um, what I could compare this to are penny stocks. So penny stocks aren't something that I really look into, but let's look at a list of penny stocks. Again, this is not one that I necessarily dab with. I did in when I was a beginner. So this says five top penny stocks. So penny stocks are really cheap stocks. So these will probably be on a brokerage account. So you've got the Soros Pharmaceuticals, Gritstone Oncology, MCore, Assure, and then Humacyte. So those would be examples of penny stocks. So you can see they're really cheap stocks that people will put a large amount of capital in, hoping that the stock would go up. But I don't really dibble and dab in that one. And if I did, I would be really strong on the technicals. Okay, so essentially that's that in a nutshell. Now I'm sorry, GameStop would be an example of a meme stock. Okay, so if you dabble in meme stocks like GameStop, AMC, what else is out there? GameStop, AMC, Bed Bath and Beyond is another one. So those are stocks that really move, especially running up to earnings, or if they beat earnings, like if they beat on earnings per share and not revenue, the stock, for example, could just pop up. Um, if they beat on just revenue and not earnings per share, um, the stock would just pop up. Sometimes you'll see that they'll run up on the way to earnings and then it'll sell off after. And sometimes they'll run up to earnings and then they'll continue to run up after earnings. If there's any bit of getting good news, it doesn't matter what it is. So if you want to do that option, which I'll do every now and then. So if I see AMC is low, I may put $100 in it. Like right now, I think it's low. So let's find AMC. Okay, AMC is right here. So right now, the current price is $4.85. So that's pretty cheap. Um, let's come here and look at AMC. So we're gonna look at the chart to see where it is 6 months out. So you can see it's down 80% over the last 6 months. And you can see the little pop-ups here. 1 year out, you can see it's down basically 90%. On their 5 year, you can see these big spikes that go up. So this is what people are riding the waves on, these big spikes that go up here. So you can see it comes down in a big spike from 55 to 90. So you'd almost double your money there. So from 48 bouncing up to 95 again. Now it's coming down, then it bounces up. Okay, even down here, you've got a bounce up there. So this is basically what meme stocks do. They, when they're up, they're up, but they'll come down quickly. So you got to be quick on your toes. So let's look at GameStop. Uh, let's go 5 years out. So again, you see these big waves up and down, up and down. So you're riding the waves up. Another good thing about these meme stocks is when they come up really high, you know they're gonna come down. So then you can put a put option, so you can make money on the way up or down. Bed Bath and Beyond is a really big one. I think they have any charts on here, but yeah, that's another one you can take a look into. So again, that's another option. Um, And just like the penny stocks or the over the counter stocks, the meme stocks, you basically will put a large amount of capital, or if they have options available, because sometimes meme stocks may not have, well, penny stocks a lot of times don't have options available. More times than not, these GameStops and AMC's, the meme stocks will have options available. But the only thing with that is you're going to come with a little higher premium than a lot of the stocks that are lower in their price per share. So now the last one says earn compound interest. So I think this is one that's probably going to be a bit boring for those of you that are younger. Um, so somebody like me that's, basically 1 year from being 40 years old, uh, it's important for me to have a large percent of my money in something that's going to earn compound interest. So if you're investing in some kind of fund that follows the S&P 500, like you have SPY, you have VOO, you have SPLG, you've got VTI that's heavily weighted with a lot of the companies that are in the S&P 500. So um, this is something, like I said, that's very important because you don't want to just only day trade or swing trade or put your money in these meme stocks or penny stocks, waiting on them to make a move and they don't. So be careful with that. Don't try to go out here hitting home runs. And if you're gonna do something like this, the speculative trading or the meme stocks, make sure you have your stop losses on. Even with your short selling and your day trading, stop loss, stop loss, stop loss. Don't go into this thing with a gambling mindset. Have your entry strategies, have your strategies of coming out, have a game plan no matter which one of these you're going to use. Okay, so that's what I got for you guys. These are the Fastest ways to become rich by investing in the stock market. Yes, they all can work, but again, be ready to play defense. Have a game plan. Do not let Wall Street take all your money. All right, we're out, guys. Peace.